Hello, chart watchers, and welcome to this Wednesday, August 1st, Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we got the Dow Jones Industrial Average under a little pressure today, down 59 points. The S&P 500 down 3. The NASDAQ on a relative basis outperforming up 16, while the Russell 2000 gives back much of its gains from yesterday, down 10 points today. 10-year Treasury yield moved above 3% earlier today, currently trading just a little bit beneath that 3% level. Volatility index, after moving back down into the mid-12s, has rebounded and is up 3% today. Technology doing extremely well today, not surprising given Apple's strong report. Healthcare also performing well, a couple of nice earnings reports in that space. Energy, though, on the other hand, really struggling today. Crude oil prices have been hit, and also U.S. crude oil stockpiles building, and that has definitely put some pressure on the energy stocks. Apple, as I mentioned, now a $200 stock, closing in on that $1 trillion market cap valuation. Apple up almost $10 on its earnings report. Humana, one of the stocks in healthcare, really responding well to its earnings report as well. Did break above that 320 level. Stock currently up $11. And then perhaps one of the best earnings reports I've seen this quarter came from SodaStream, ticker symbol SODA. The stock beat top line by a mile, bottom line by a mile, and then really raised their forecast quite a bit as well. And the stock, as you can see, up $20 from about $87 yesterday up to $107 today. Soda doing extremely well. All right, Erin, well, welcome back to the show. Welcome to August. How are you today?
I'm doing just great. It's great to be back. I had a very nice time with my new husband. I think we're still considered newlyweds, but it was a year this last weekend for us. So very exciting. Some may remember me being off on my honeymoon last year. So I can't believe a year's gone by already, Tom.
Yes, time is flying, and congratulations, by the way, on the year.
Thank you.
Yeah, time is flying. I couldn't believe it this morning when I was actually writing my blog, and I realized that it was August 1st. And my daughter gets married September 1st, so she gets married in a month. This will be my first getting married, so very exciting time for
Yes.
And and then I'm thinking ChartCon, is just 9 days away now. We've been talking about it coming up later this summer or next month or in 2 months. Well, it's August now.
I know, right?
Very exciting. Mary Ellen. I also want to thank Mary Ellen for subbing in for you yesterday.
Oh, I heard she was absolutely excellent. So it makes me feel better knowing that if I leave, that she's probably going to be on deck.
Yes, she did a fantastic job. I think everyone enjoyed having a different perspective on here. She kind of put in a bunch more fundamentals with the technicals, and I thought that was interesting for sure for a lot of our listeners and viewers. But yeah, I do want to thank her for stopping in and helping us out the last couple of days, and she'll be at ChartCon as well. So if you enjoyed listening to Mary Ellen the last couple of days, make sure that you sign up for ChartCon. You'll get another presentation from her as well as many others. So getting exciting.
Yes. I can't believe we're just a little over a week away.
Crazy.
Okay, what do we have coming up though? Before that, Bruce Fraser is going to be in tomorrow. Mr. Wyckoff. I'll be doing the sentiment update for the week on Friday. Monday is the earnings spotlight, and I guess what's next? Oh yes, ChartCon. It will be August 10th and 11th, as we were just talking about. We do have some Stock Charts TV announcements, though. Obviously, since we will be having ChartCon, there's not going to be a Market Watchers Live until August 20th. So, it makes sense with ChartCon in the middle, and then we're going to be off on that cruise. But no worries, because a lot of us, pretty much all of us, I think, have recorded brand new special segments that will air the week after ChartCon. So even though we won't have any live shows that week, we'll have plenty of fresh content for you out there. Today, what are we going to do today? Well, I know we're going to start off with the DecisionPoint Monthly Review. I'll be going over those monthly charts, giving you a taste of what to expect next month. 10 and 10 to 1, our first symbol will be Booking Holdings and BKNG, if you want to go look at that. And finally, Tom's going to finish it off with a scooter report. So let's start it off, Tom, with some technical news and headlines. There's a lot going on out there.
Yeah, there's a lot going on. There was quite a bit of economic news out today. You can see the 10-year Treasury yield. We've been talking about this once we got through the 20-day moving average. It seemed like the next logical stop was to go up and test the overhead resistance near 3%. And that's exactly what we did today. We got up as high as, well, almost 3.02%. Have pulled back. We're now a little just slightly below 3%. And now it's going to see, we'll see which way we go. I find it interesting many times where we sit at a key level right before a major Fed announcement or something like that. Of course, we do have the FOMC policy statement coming out at 2 o'clock today. I think the majority of folks not really expecting anything in terms of a rate increase today, but many are looking for 2 more increases before the end of the year, and we'll be listening closely to what the Fed has to say. But so I'd be watching this range from this 3% level where we have shown overhead yield resistance down to the rising 20-day moving average, which since we climbed above about a week and a half, 2 weeks ago, we have not really gone back and tested this level. So let's just call it a range right now between about 2.92% and 3.01%. And let's see which way we break first. But 2 o'clock this afternoon, I expect some pretty wild movement on the 10-year Treasury yield, as well as the S&P 500 and the other major equity indices. That's typically what we see on Fed Day. And many times the initial reaction is reversed. I've seen on some afternoons after Fed announcements where we've had 2 or 3 moves, false moves, one direction or the other, just these wild swings back and forth. It's a very, very volatile and difficult time to trade because your emotions can swing pretty wildly in the afternoon. So just be careful at 2 o'clock this afternoon when that announcement comes out. Again, I don't believe we're going to see any kind of a change in rates, but I do expect that the Fed will probably say something that will get the market going in one direction or the other. So stay tuned for 2 p.m. later today. As far as economic news out this morning, we had the July ADP employment report. This is a precursor to Friday's non-farm payrolls. And the ADP employment report was pretty bullish, 219,000 jobs, market only expecting 173,000. So a pretty big beat. June ADP employment report, we did have an upward revision, a slight revision higher from 177,000 to 181,000. So pretty good news on the employment front. Then July PMI manufacturing index came out just slightly below expectations, 55.3, market looking for 55.5. July ISM manufacturing index, 58.1 versus 59.5. So both of those manufacturing indices came in a little below expectations. And then June construction spending fell 1.1%. Market was looking for a rise of 0.3%. Part of that shortfall could be explained by the fact that May was revised quite a bit higher, from 0.4% rise to a 1.3% rise. So maybe a little bit of offset there. Nonetheless, I think the market really paying attention most closely to that employment report that was strong, and that sent a lot of folks out of the treasuries, making the 10-year Treasury yield move higher and test that overhead 3% yield resistance level. I mentioned earlier crude oil prices. Last time I looked, crude oil was down about 2% today to around 67.5 per barrel. A couple of things here. Number one, U.S. crude stockpiles rose, and that put some pressure on the crude oil price. Anytime you got to build an inventory, that is overhead supply, and prices tend to drop. And then we also had some not so great earnings reports that came out of the energy space as well. So combine all that, and what do you get? You get an XLE that bounces from key resistance area up here between 77 and 78 and moves back into the trading range. We have seen this now for 2 months, a little over 2 months, where we've traded between about 73 on the XLE to the downside, 78 on the upside, and it's just been this roller coaster ride. And currently we're going downhill on the XLE. Good news, though, Apple. Apple came out with its earnings report, and you can see gapped up, trading at an all-time high. Very heavy volume on this push to the upside. Apple up $10 today, more than 5%. And that should take us up to, I haven't looked, but I'm just off the top of my head guessing that we are probably looking at a market cap right now on Apple around $980 to $985 billion, getting very close to becoming the first $1 trillion market cap company. And of course, when Apple goes up, its industry group, which is the computer hardware, DJUSCR, also gapping up with it and breaking out. And then, of course, technology is going to move up higher in sympathy. And technology had been moving down for 3 or 4 days, really putting a scare in some folks. I think in the short term, though, what we saw is simply a test of trendline support. And I'm going to go stretch this out to a 1-year chart and annotate and just show you how we literally came down and hit this trend line almost beautifully before starting to bounce. So if we connect the April low, both lows in April, and then again the late June low, and then come across, notice how that hits the lows from just this past week, earlier this week, perfectly. We got a really nice trend line in play with multiple tests along it. 1, 2, 3, 4, 5, probably about 7 or 8, maybe 9 tests. That's pretty strong, even though it's only been over the past 4 months or so. So if we break this trend line, then I think we could be looking at some more additional selling. NASDAQ could fall under quite a bit more pressure. But if this holds and continues, then I would be expecting that we've seen a short-term bottom and be looking for advancing prices. And now as I go forward, I do want to take a look at the software group, because software was getting hit pretty hard. And this has been one of the leaders within the technology space. We're not really getting a huge bounce, but the good news is we are getting a bounce off of price support. If you notice, the high that we had back in June was just at about 2180, 2185. Here are the tops that we saw back then. We broke out, and all the selling that we just saw really has come back down and essentially just tested this overhead resistance, which became support. And now we're starting to turn back off of it. I would watch the 20-day moving average, because if this truly is the start of a downtrend, normally what we see is a test of the 20, a failure, and then we break to new lows. The low that we saw back on Monday was just at about 2165 or so. Notice the 50-day moving average currently at 2162. So if we fail at the 20-day and go back down, take out the 50-day, that will then be taking out the low, the price low that we saw on Monday. And that could lead software back down to the June low. Now, I want to focus here for a minute on software. I had written in my blog, I believe it was yesterday, actually, rather than recreate the chart. Let me see if I can pull this up. I'm pretty sure it was in yesterday's blog article. Maybe it was Monday. It was yesterday. So here's the software index. And let me go ahead and bring up the live version here. But we have seen a huge rise in software. I mean, let's keep things in perspective. Even throughout 2014, 2015, 2016, when we were consolidating, software remained fairly strong on a relative basis. But what we have seen over the course of the last year and a half to maybe, 20 months or so, has been really strong. We saw the software back at the beginning, really over the last 2 years, because we go back to the first quarter of 2016, we had a software index that was barely trading above 1,000 after this pullback. We just went up and tested 2,300. That was, again, over just a little bit more than 2 years, early 2016. So we're talking about 2.5 years going up more than 100%. So I know we look at things on a very short-term basis sometimes. And so when you see the software index go down a couple of days, you feel like, oh my gosh, it's over. The run is ended. But just keep in mind that this has gone up, software has gone up quite a bit over the last 2.5 years. It deserves a little bit more of a pullback and some rotation. I would not be surprised at some point, whether it's, here in the next month or two, or whether maybe we go out further, maybe it's later this year, early next year. But I would not be surprised to see a 50-week test. We have not had one in a year and a half. And with a negative divergence here on this weekly chart, it could happen at any time. So the way I would approach software, it's not that I would avoid software, but I would keep my stops in play, because if the selling does begin to pick up, we could see a lot more selling than what we're accustomed to when you go back and you look at the daily chart. And again, let me pull up this daily chart, and you will see, when we pull back, these little pullbacks that we see on the daily chart, which feel like they're really big, you throw it onto that weekly chart we just looked at, and really it's not much at all. We could see much more selling given the negative divergences on the weekly chart. So if we start to lose some of these key short-term support levels, I think that's when we want to be much more cautious, the software group. I want to talk about some of the earnings reports that came out. First, let's pull up Molina Healthcare, MOH. There were some really good reports that came out, by the way. Huge gap up here across that 107.5 resistance level, opened up over 120. I'm going to pull up a relative chart just so you get a sense of what's been going on with Molina Healthcare and the group. First of all, it's in the healthcare providers area, and you can see the group is breaking out to new highs here as we go throughout July. It just set a new high. But Molina on a relative basis is even outperforming that index. So we've talked a lot about wanting to find stocks that are not only strong, but they're strong relative to their peers. They're strong relative to the S&P 500. And for the most part, their index, their peers are strong relative to the S&P 500. This is how you outperform the stock market, by getting involved in companies like this. Molina, great earnings report. They did beat top line, $4.88 billion versus $4.66 billion. Bottom line, $2.25 versus $1.09. So it really wasn't close, and you can tell from the market reaction, they loved it. Stock up 16% today. I wouldn't be rushing into a stock here, but this is certainly one that would go in my chart list that I would be studying and watching and waiting for timely entry at some point down the road. Let's take a look at Humana. Mentioned Humana at the open. This is another one that's in the healthcare providers, and you can see breaking out. But Humana's been breaking out. Even back in April, we had a breakout above the January high when the overall group was not close to breaking out. And so it's just continued to move higher as the healthcare providers index has broken out. Humana, on a relative basis to its peers with today's earnings, is breaking out again. Versus the S&P 500, it's been on a roll. And you can see, again, here's that healthcare providers index, which has been trending higher relative to the S&P 500. Another one that reported pretty strong numbers, IDXX. IDXX reported top line $580.8 million. Market looking for $575. So a nice little beat there. $1.23 on the bottom line. $1.18 is what the market was looking for. A lot was built in. This is a buy on rumor, sell on the news kind of event. It opened to almost about where it closed yesterday, but quickly sold off. Notice went right down to the area where it broke out from, just below 230. Got to a low of 227 and change, trying to reverse here. Medical supplies has not broken out yet, but since the group topped back in January, we have seen 1, 2, 3, 4 different breakouts on IDEX Labs. So you definitely have a strong stock within this space. Finally, let me bring up Soda. This is the one I talked about earlier. Unbelievably strong report. Soda, top line $171.5 million. Market only looking for 147.9. So that was about a 17% above consensus report on revenues. Bottom line, $1.14 versus 73 cents. And they raised their fiscal year 18 revenue and EPS guidance rather sharply. And you can look at the volume coming into this stock today. We are looking at halfway point, not even halfway point of the day. And we've already traded 2.8 million shares on SodaStream. You look back over the last year, and the highest volume looks like it might have been 1.4 million. So over the last year, or at least today, we're trading twice as much as any day we've seen in the last year, and we're only halfway through, not even halfway through the trading day. So there is a lot of interest in this stock. Huge gap up, and even after gapping up to 102 and change from yesterday's close at 87 and change, the stock has continued moving higher. A lot of demand here in SodaStream, so this is one certainly to keep an eye on as we go forward. I won't go through the charts, but there were a couple of disappointing reports out of the energy space. Anadarko, APC, Neighbors, NBR, Devon Energy, DVN, all three came in below expectations, had some miscues with their reports, and leading some of the weakness that we see with energy. Okay, well, it is August 1st, and we do take a look at the DecisionPoint numbers and how they switch over at month end. So, Erin, I'm going to let you take it away and bring everybody up to date on what's going on in those long-term charts.
All right, let's take a peek. And let me just tell you a little bit about what I'm going to go over here. We're going to look at the weekly, daily, and especially monthly charts as the month has closed, and all of those monthly charts have now gone final. And then I will be covering the Big Four monthly charts as well. And then I'll finish with looking at also our decision point indicators, so you can see where we stand in the very, very short term, and intermediate term. So let's go ahead and get this started. All right, I wanted to first point out to you from your member homepage, and let's get this bigger, that from your member homepage in the Pro Control Center, you can find the DecisionPoint chart list. And I'm going to show you that the DecisionPoint chart gallery. Just keep coming down, and there it is. The DecisionPoint chart gallery has the scoreboards and then all of the trend condition, breadth, and sentiment charts. These aren't annotated, so if you want to get the annotated versions of those charts, you just go to the DecisionPoint blog and you will find my live chart list right here. And really every chart that I'm getting ready to go over right now with the annotations are included here. So that's a great place to go, and that way you can keep up with it even when I'm not around to give you the scoop. All right, so I want to go ahead and get started. We're going to look at, I'm just going to go flip right through these. So it will probably feel a little bit fire hose-like, but I'll try not to make it too crazy fast here. All right, so I'm going to start with the Dow, and we're just going to move on through. And this is the daily chart. I had set up some Fibonacci lines. I think that they were very interesting, as they tended to line up very well with support and resistance. So I'm watching closely this support line that is coming across that top we had back in June. We're having some trouble staying above it right now, and consequently we're starting to see the PMO slowing just a bit on the daily chart. So the shorter term is looking a little bit weak here. But what I'm seeing on the weekly chart, and I've noticed when I went through all of these, that the weekly charts tended to be a little bit more bullish and optimistic than the daily and the monthly charts. So I just found that interesting, but keep an eye out for that. So as you can see with the Dow on the weekly chart, we have what I was looking at this, and I think you could make a case for an ascending triangle. And that would mean that we should look for a breakout above that 25,500 area and a continuation on up to test all-time highs. And look at the PMO. It's rising nicely. It is starting to decelerate just a bit, but that's really coming off of this bar that we have starting off this week, but are finishing the week. So we're going to wait and see what happens for the end of the week. But right now, that's what we're looking at. Our weekly charts don't go final until let's see, the last trading day of the week. So we have to wait till Friday for those weekly charts to go final. And I'll be giving you a good look at those on Monday, more than likely. I'm seeing a rising wedge, though, on the monthly chart. And you're going to see a few of these rising wedges on the monthly charts. And I think that tells us to be cautious and aware that there's weakness out there. And as I said, when you look at the daily chart, you can see some of that short-term weakness peeking through. And that is what concerns me about the long term. The fact that we have these bright pictures for the weekly chart is interesting, but I really am paying the closest attention to what's going on these daily and monthly charts, mainly because they are giving us some caution signals. So as you can see here with the Dow, I do see what could be a rising wedge. Those are bearish patterns, and the expectation would be a breakdown out of that pattern. And, when you look at this, a breakdown would require a break below this support area here. And you get that breakdown out of that wedge, and really where's the next area of strong support lie. And it could be all the way down here to the 18,500 level. I think there might be a way to get it to slow here at 21,000, but we need to be cautious here in the longer term. Keep an eye on that. All right, so let's take a look at the NASDAQ 100. And of all of them, this one is, not really running with the crowd here as far as those large cap indexes that we cover in the DecisionPoint scoreboards. And I am watching now the tech space, and it was when we went through the earnings and we had some hiccups along the way in the tech fields, the tech companies, it's not a surprise to see this deterioration going on the NASDAQ 100. I think the good news really right now, and I mentioned it yesterday, is, we have this rising bottoms trend line. We have this support level at that March high, and both of those were coinciding. And my message was that we have strong support here. We have the best support we could ask for between that rising bottoms trend line and that horizontal support level for the NASDAQ. And that told me that we need to hold it. We do not want to fall below that area of support, because it has very important implications there, because now you have to start looking for those next areas of possible support. But for now, paying attention to this, we can see that with today's move up, that support level does seem to look safe. The one thing I found interesting was that we had these new short-term PMO sell signal that showed up this week, and a short-term trend model neutral signal. And I am going to be watching this one closely as well, because we want to see if that PMO can bottom before it reaches below its previous bottom, because that would set up a negative divergence I don't really want to see. Currently, we're seeing this rising bottoms going on. We don't quite have that next bottom yet, but I still see, there's deterioration here. We should be concerned about it as far as tech, but I have to wonder, is this, just a problem because of the earnings, disappointments that we had, and just pulling that NASDAQ 100 back a little bit harsher, a little bit more jerk on that downward than on the other indexes. That could be what we're seeing here. But look at this weekly chart. We do have a rising wedge, and that is a bearish pattern. And notice that the PMO on the weekly chart has also turned down for the NASDAQ. The monthly chart is actually not so bad. The PMO is continuing to rise. We're still in a rising trend channel. I don't see that rising wedge in the longer term. And the only caution I guess I could say here is that, yes, we're in the rising trend, but that trend channel, you are vulnerable to a test of the rising bottoms line that forms the bottom of that rising trend channel. And so again, there's some caution to be had there. But watch the 6 month and 10 month EMAs. If we start to struggle to hold those, you can see we had a little difficulty back here, but we still managed to close higher. So that, it managed to save itself at that point. We have, like I said, the PMO is rising nicely. So of the 4 scoreboard indexes, the NASDAQ 100 is looking the strongest in the longer, intermediate to longer term. But the short term is really starting to deteriorate. The S&P 100, here's some important support we have back here on those February and March tops. It's holding it. The problem we're seeing right now is a PMO sell signal lining up. And you can see that if you count today's action as well, we've started to move upward, but the PMO has continued to move lower. So again, the short-term picture for these large cap indexes is waving a caution flag to me. Now, when we look at the intermediate term picture for the S&P 100, We have a PMO buy signal that came in just a few weeks ago, and we are holding that area of support. And again, that was, you could see that on the daily chart. And I will be looking for it to come up and test those all-time highs. This is a really bright picture here for the intermediate term, seeing that buy signal come in. What do we have on the monthly chart here for the OEX? Another rising wedge possible. The PMO had started its way down. It has started back up, but we're seeing it decelerate right now. So, that could be, again, telling us in the longer term picture to beware of this rising wedge that's occurring. So you can see that when you're looking at all three time frames, you can get a different message. And so trying to coordinate all of those and get a sense for where we go from here going into the next month, it does make it a little bit tricky. All right, let's move on to the all-important S&P 500. Holding support nicely. In fact, moving off that 20-day EMA nicely. We are seeing a decline today, and we do have a PMO sell signal on tap, and we just saw that on the OEX as well. So in the shorter term, we are seeing some deterioration. We're seeing some caution flags, but we're still holding support on all of these indexes. The weekly chart for the S&P 500, we just got that PMO buy signal that triggered, I believe it was last week. We have that breakout above the overhead resistance that we had from March. I believe that's a March timeframe, and we're holding that. Very important. I like the buy signal showing up here on that weekly chart. And we still have a buy signal on the monthly chart. But you can see the PMO is trying to decelerate on the monthly chart, and we do also have another rising wedge. Let's go ahead and move into the S&P 400 and 600. And one of the things I noticed with the S&P 400 in particular is that it is really struggling in comparison to all of the other indexes. Mid caps are not enjoying a rally right now. They're not enjoying any buy signals. We can see that we had a 20-day EMA negative crossover. We have the PMO sell signal and a continuation of that decline on the PMO. Look at the scooter for IJH continuing lower. And the only, I would say, somewhat bright side here is that even with this deteriorating, let's see, go back up here, this declining trend, the volume isn't really isn't deteriorating as bad as I would expect it to. We are still seeing rising tops, rising bottoms. So we're not getting a read that the volume is all that negative in the way it's set up. But the fact we have these PMO sell signal and that deterioration of the scooter and declining trend, we need to hold that support there at 195 for the S&P 400 ETF IJH. Weekly chart, new PMO sell signal on tap here for Friday. We'll be wanting to watch that. I will report on that. Notice on the weekly chart, you can see a double top forming here off this rising trend. The neckline or confirmation line is right around that March high. So if we get that breakdown below that support level, below the confirmation line here, we should expect to decline the size of this pattern, and that would take us just below this rising bottoms trend line. So we need to be concerned in the intermediate term for the S&P 400 as well. The monthly chart doesn't look any better, guys. We've got a long-term PMO that is topped, is heading down for that sell signal. Don't have it just yet, but yet another rising wedge, bearish pattern. S&P 600, we could see a rising bottoms trend line right now. It's holding support right here for IJR at about $85. But again, look at the PMO, a very negative. And now we have a third top below that PMO signal line. So while we were seeing some leadership for a while in the small caps, we're not seeing that anymore, at least when I look at this chart and I look at a PMO that is in decline like it is. We do have on-balance volume, though, with rising bottoms. So volume is just not looking that negative, but the momentum shift is not good. You could see the IJR S&P 600 was showing some leadership. It's still holding on to that high scooter ranking, telling us that it is relatively doing quite well. We are down 0.75%, though, on the day, but we're holding that support within that trading range. Weekly chart, still have that rising bottoms trend line. I didn't draw one in. I suspect that we would find another rising wedge here. We have a PMO that is falling on the weekly chart. So intermediate term is looking shaky here for the S&P 600 ETF IJR. Monthly chart, I'm seeing a rising trend channel. So it doesn't look bad here when I look in the long-term picture for the S&P 600. In fact, I think this long-term picture looks about as good as all of the if not better than the large cap indexes. You have all of these bottoms that were above the signal line and rising. The PMO is still rising and strongly, I might add. So we are at the top of this rising trend channel. And like I said, that does leave us vulnerable to a drop to test that rising bottoms trend line. But at this point, I like that PMO. I think it's showing us some strength. All right, let's look at the Russell 2000, a similar situation, although notice with IJR, we had a trend channel that was holding here between the July trading, of the overhead resistance and the support level. But you can see with Russell 2000, not the same. We actually ended up with that rising bottoms trend line being penetrated to the downside. We're now seeing closes below the 50-day EMA. And look at the PMO. We got another top below that signal line, and it is still continuing lower. So the Russell 2000 is looking quite weak right now in the short term. But what do we have in the intermediate term? Another problem, in my opinion. That is a double top, I would say, and we're looking at the neckline or confirmation line right about at that top we had back in early 2018 off the January move. And we have rising bottom support here. And if you did have a drop below that confirmation line, the length of this pattern is about 70 points here. So bringing that down from, let's see, we were at the 160, I'm sorry, that's 10 points, 160 to 170. So 10 lower brings us at about 150. That would make us have, that would have it penetrate the bottom, that rising bottoms trend line. And now it would be a matter of finding some more support. And that would be right here about that 142.50. The PMO was on a buy signal, but it has turned down on the Russell 2000. Intermediate term looking shaky. The monthly chart is still looking, I'd say, okay. We have the PMO is still rising. It is trying to decelerate. But again, I think that would be, that's because we're seeing some decline right now on the monthly chart just based on today's action. So that's not giving us that much information there, but it is still rising. And I think we do see here a rising trend channel. So the rising trend channels on those, the Russell 2000 and on the S&P 600 ETF, I think it gives us at least a little bit of optimism in the longer term for those smaller cap stocks. Let's move on to our decision point indicators. And the climactic indicators, I use these to give me really just a day or two advance notice on what might be happening. This is the monthly chart review, but I'm also including my regular weekly on this that I do. So we look at those indicators as well. And you can see that as far as the VIX goes, those Bollinger Bands are tightening up again. Whenever I see them tighten up, I find that we don't get the best help as far as looking at whether it penetrates the bottom or the top of that Bollinger Band with that squeeze. So now I really want to pay attention more to the breadth part of this chart. And you can see that we are starting to see a bit of a rise here on those new highs, and new lows are beginning to move lower on this rise that we have. And we have some nice AD readings here. We've got high readings. They're climactic, not particularly so. We've certainly seen higher ones. But what I'm seeing, if I'm getting these readings, these positive breadth readings off of a price rise, I would say that we're looking at more than likely a buying initiation over the next day or two. I have to say that, listening to Tom, though, we do have to see what happens with the Fed news. There are a lot of earnings reports out there. But, in general, when I see those climactic type readings on breadth on that ultra short term or climactic chart, that does give me some pause and to think about the next day or two being positive. That's just what typically happens. So I'm reporting it as I see it. Short-term indicators are rising. We did end up below the zero line on the Swenlin Trading Oscillator for volume, but it didn't really hurt anything, and we ended up moving back up. So the short term, as far as the indicators are concerned, is positive. We're seeing those rising. They are not overbought yet. And so between the climactic indicators and the short-term indicators, we should see this support level hold. Intermediate term indicators. These have been very interesting, and I always talk about how, you'll get these tops on these indicators, but I don't get too worried until I see those negative crossovers. Well, we had the negative crossover earlier in July, or back in July. I guess we are in August now. We saw those in mid-July, and we saw the deterioration. It was still falling. We got the negative crossover finally here on the ITBM, but you can see in both cases they're trying to rise again. So we could be looking at that move up. We do have a little bit of a concern here to think about, and that is declining tops on these indicators, and the corresponding tops on price are rising. So something to think about as well. But I think the fact they are turning up is positive. But we know when we looked at those monthly charts that there is some deterioration, and we're seeing those PMOs not necessarily cooperating on the weekly charts. So, I see that negative divergence, and that also gives me pause. All right, let's go ahead and move into the big four, as we call it, Carl and I. Dollar, gold, oil, and bonds. And I'll give you a short look at what we're seeing here. I've been watching a possible double top. I think it's still valid on UUP, on the dollar. And we do have a declining PMO. And notice that those bottoms continue to decline while price bottoms continue to rise. So that's something to consider. The volume, though, has been very consistent. OBV has been consistently rising with those rising bottoms. So to me, volume on UUP is confirming a continuation to the upside, that we will hold this support level at that November top. So volume is telling me not to worry. The 5-day EMA has turned up above the 20-day EMA before triggering a short-term trend model neutral. So I'm looking at this as well, and I'm starting to see what could be like a diamond shape, and those are actually bullish chart patterns. I'm going to look into that a little bit more and write about that, but my recollection is that those diamonds tend to be bullish formations. So we may really not have to concern ourselves with this possible double top. Weekly chart. Here we go. Possible flag formation, managing to hold support at 24.75 for UUP. PMO is still rising. So I think it looks pretty good. We're in the middle of that trading channel. given the PMO, I would say we should expect some upside in the intermediate term. Monthly holding support at 92.50. This is the actual US dollar index. You can see the PMO is turning up. And I think it's very important that we hold that 92.50 support. Looks like we will. We got that bullish declining wedge, the execution of that 2 months ago. And it looks like it's continuing. We're not seeing that failure. The pattern has executed. I would be looking for a rise, remember, the backside of these formations. So I'd expect a rise, let's see, 95 to roughly 105. So we're looking at a 10 point move here to the upside out of there. So we would look at, that 100 level where we're seeing those tops as well. For gold, and then we will wrap this up. Gold, it's kind of a good news, bad news situation. We've been holding that 1200, 1210 level, but we can't seem to bust above 1240 right now. And it's been a lot of July that we've had that trouble after it dropped down below 1240. I think good news is on the horizon, though. We do see the PMO having a buy signal in the shorter term. And so we could expect a possible breakout above that 1240 level. Notice also the discount rates here, the discount levels on the physical gold trust are quite high, and that indicates there's bearish sentiment, and with sentiment being contrarian, you would say that is bullish for gold. So I think it's looking up for gold. And, when I look at that possible double top on the dollar, we could see again in the shorter term, we might have some issues with the dollar, but that would help gold. All right, when I look at gold's weekly chart, that 1200 level is all important. Look at all of the many, many touches on that support level. That needs to hold in a big way. But we have a PMO sell signal, so the intermediate term is not looking that healthy at this point. However, the monthly chart is looking even more ugly with the new PMO sell signal. We have this trading range between that 1200 and 1400 on the monthly chart, and we're holding that 1200 level, but you can see how important that level is for gold to hold. Otherwise, that strong area of support will give way, and I would be looking for drops 1100 and 1000 when you look at it in the long-term picture. All right, USO holding support here on the daily chart. We had a negative divergence here, but it does seem to have played out with that decline. We did make that attempt to get back above that overhead resistance from May, failed, but like I said, we're seeing support at $14 holding. But look at this ugly PMO, that top below the signal line, and we're seeing the OBV stalling right now, as well as the scooter. All right, weekly quickly, and then we're going to move on. USO, you still are seeing that rising trend going on. The PMO is just really noisy and not helpful. So I'm not getting a whole lot off this weekly chart for oil. And as you can see, declining tops on oil. We do have the PMO buy signal on the monthly chart, which I like, but that 75 level is holding tight as overhead resistance. And now you can see the declining tops line could be coming into play. So the $75, $80 range might be a little bit of a sticking point for USO. As far as bonds, we're having this breakdown. We were in a little bit of a trading range, but not surprisingly, when you see that PMO sell signal that is sitting there. And let's go real quickly to the weekly and monthly, and we'll wrap it up. We have a head and shoulders pattern going on here, and I'm not ready to give up on that intermediate to long-term head and shoulders pattern, because we really haven't made an attempt to get much past or up to the shoulder area. So the rising bottoms or you could say neckline is also holding up, but I'm not expecting it to for very long. The PMO is now turned down. The monthly picture, I don't think is any better because, again, there's that head and shoulders, and you can see 145 would be, when you look at the monthly chart, the level of that neckline. The expectation, of course, is a length of the pattern to move lower, and that would bring us all the way down to that 120 level. And look at the PMO. It's now looking at levels we haven't seen in many, many, many years. So very much concerned about what's going on with bonds. And that pretty much completes the monthly decision point review. Let's go ahead and take a peek at those summary slides. And there you go, scoreboards. You can find those on the member homepage. As you can see, NASDAQ is the first one to start its deterioration in the short term, but intermediate and longer term, we're still seeing all those buy signals. The Dow is working very hard on it. Okay, so when we looked at the large caps, what I was going to mention was the fact we have those buy signals, rising trends. The wedges are what concern me. Mid caps I thought looked very weak, and small cap indexes, you know, we have the long-term PMOs rising, and that rising trend channel is intact, but we're seeing some deterioration in momentum. All right, and to finish off our decision point indicators, as you can see, setting up the intermediate term indicators are turning up slightly, but they're still looking a little bit negative with the declining tops. And with the big four, all right, there you go. Dollar is holding that support. I think it's all important, and it needs to hold that support. Next resistance is at $100. 100 points, I should say. Gold, we're seeing that long-term trading channel, and you know, it's holding that rising bottoms trend line and support at 1200, and it looks like it really does want to make a move above 1240 right now. As far as oil and bonds, there you go. We've got resistance on oil. PMO is healthy and not overbought, but I'm starting to see a little bit of problems on those longer term charts. And bonds, that head and shoulders on the intermediate and long term, and the weekly and monthly is a problem, and that long term PMO is quite concerning. And that concludes the monthly decision point review. It's time to move on to the 10 and 10.
It is. That's a lot of information to get through.
Ooh, it is. I managed to cover it though, and hopefully it was helpful.
Oh yeah, definitely helpful. It's always good to take a step back and look at the longer term picture because we focus so much on the short term here.
Absolutely. All right. Since I was working so hard on getting that monthly review together, I did not get a RRG together, obviously, for the 10 and 10, as you guys were throwing them in there as it goes. So I will just be sending them out your way, but we do know booking is going to be our first one.
All right, let's take a look at booking. Without even pulling it up, I can tell you from a seasonal perspective, booking is one of the most crazy stocks out there. It does extremely well. In fact, we'll come back to this. Let me show you the seasonal because I do think it's really important on this particular stock because it is the disparity is so great between the beginning of the year and the rest of the year. But over the last 20 years, I want you to take a look at what happens January through April and look at these average monthly returns coming across. 5.7% January, 8.6 February, 7.6 March, and April 12.7, 4 consecutive months where these aren't annualized returns. These are average monthly returns. And if you add them up, you would come up with what, 14, 21, 22, probably about 35% that Priceline or booking holdings has averaged going up from January 1st to April 30th over the last 20 years. That is a massive move for an entire year, much less 4 months. And doing it on average over 20 years is pretty impressive. But once you get past April, when you take a look at the rest of the year, it's very mundane, not very exciting for booking. So we are heading into August. And when we look at the second half of the year, August is the best month for the stock. So keep all this in mind that, you know, you're not in the best time of the year. August is okay, though, kind of, I don't know, maybe a little light there in the middle of a pretty dark 6 or 7 month period. But when we go back, let's go back and take a look now at that chart. I would be real careful given that I know what this stock tends to do in the second half of the year, I don't want to lose my price support level here. Otherwise, I would expect that we're going to trend lower into the end of the year, similar to what we do a lot of different years. So on this stock in particular, I think you want to pay attention to this 1975 to 2000 price support area. If you like booking, I think that you can have a fairly tight stop. I personally would stay away from it just because that seasonality of the track record there is so strong. I would instead wait. And I suggested this last year that maybe you wait till the end of December to consider getting in. Take a look at what happened again in Priceline as we went into the beginning of the year. Made a huge run into March. We were at 1,700 and change to start the year. And by March, we were up over 2,200, kind of following that historical pattern. So I know a long answer to a pretty short question, but I think this one was one that required taking a look at some of those historical patterns, because this is one stock that really stands out to me as a historian. Just the patterns that this one seems to follow, pretty unique. So BKNG for me, I would pass on it. If I owned it, I'd really watch the support level closely.
All right. And the most popular request in the chat room was 3M Company. I just got an intermediate term trend model buy signal on it. PMO looks really great. Tried to close that gap though, and it hasn't.
Yeah, I think this one's looking much better. Certainly, it was in a downtrend. I think that's pretty obvious. We gapped down with earnings. That the earnings were not good, and so we went down. We tested that prior low that we saw beginning of May, reversed. Beautiful candle with very heavy volume. To me, that's a sign of accumulation, and we have since broken back out up into this gap resistance zone. So I think in the short term, what I would be looking at, I think you've got this gap resistance right here at 215. That would be a short-term top. I'd consider taking profits there. Maybe looking for a return back to the rising 20-day moving average, which is where I would re-enter, and then I could keep my stops tighter. But that's the trading range that I would use for now on 3M. The rising 20-day moving average at 203 and resistance, gap resistance there at 215. We're sitting almost right in the middle at 208 and change. So I wouldn't do anything if I wasn't in it at this point. But I do like a buy on the 20-day, and I like a sell at the 215 level until one of these two areas gives away.
All right. Let's look at another popular one, Square. I'm seeing it's just bouncing off that the 50-day EMA, but I don't like the negative divergence I have on the PMO.
Yeah, I saw negative divergence, but the way I play these negative divergences is that they're not always long-term. They're not always long-term reversing type plays. So here is the higher price that we're looking at on the PPO, or the lower PPO with the higher price action. But what I usually look for initially is a 50-day test to reset or potentially reset that PPO back at the center line. Because if you notice, the stock has been trading almost exclusively with a PPO above the center line. So you run into these momentum issues short term, and then you sell for a bit, PPO goes to the center line, and at that point, you really don't have any momentum, because the difference between your short-term and longer-term moving average at that point is zero. That's what the zero line represents. So I'm looking for maybe a little bit more consolidation. I'd be much more concerned about the stock if we lost the price support level down at around 60. As long as that holds, I think I would continue to hold on Square longer term.
Yep, that 50-day, for me, that 50-day EMA definitely needs to hold. How about looking at another industrial here? FedEx Delivery Services. I'm liking the picture right now on my chart for the PMO and the scooter.
Great long-term company, no doubt about it. Short-term, as a short-term trader, I don't know. For me, it's probably not a great trade. The rising 20-day moving average, I would certainly watch. If it is truly trending higher, that would be the level to keep an eye on to the downside. What I don't like is just what appears to be a lot of distribution taking place on the last selling. And now as we move back higher, the volume is much more average. Got a potential reversing candle here at the 50-day moving average. So I think that there's some waffling on the stock. I just think there are a lot of other stocks out there that look a lot better. I'm not bearish FedEx. I'm just not overly bullish.
Okay. Let's see. The next one is going to be Clorox from Consumer Staples. And somebody made mention about, I do have I have a PMO that turned down below the signal line, but they were saying, should we put our hazmat suits on and get involved with Clorox?
I tell you, some of the consumer staple stocks have certainly begun to improve here over the last couple of months, and they're trading pretty well. I think if you get a breakout above that 135 level, I think that confirms another leg to the upside. This is a pretty good example where we had equal highs coming across here and lower PPO, where we went back below the 20-day moving average, got close to the 50, got close to center line, and then started to move higher. And notice the volume coming in as we move higher. I think there's some positives here. I think you got a nice trend line, improving volume trends in a stronger sector now. It's starting to show some relative strength. So I'd watch for this breakout above 135 with some volume. Otherwise, I think maybe a little bit more weakness down to the 20-day would be something to consider as well.
Okay. Technology, and this one I'm sure your relative chart would be very interesting on, is Ultra Clean Holdings, UCTT.
All right, UCTT. Yeah, this is probably, I'll go ahead and pull up that relative chart. This is not going to be a good performer. I think there's yeah, semis haven't been particularly strong, but they have been consolidating. They've been fine. They're just not among the leaders in technology. We've seen up until recently internet and software stocks leading in that space. But semiconductors are still holding up okay. But look at this stock trading down from $34 back in October to $14 now at a time when the semiconductors have gently been moving higher. So what does that mean? Well, it means you've got one of the worst stocks in the semiconductors on a relative basis, also performing horribly relative to the S&P 500. And chips, yeah, they haven't been the greatest sector, but they haven't been the worst either. And so this is, you got a bad stock in an okay industry group. I think that we're oversold. I think we could see a bounce here, but I would not be looking for anything longer term. I think from a bounce perspective, you got the declining 20-day moving average, which you can see we've been struggling to get above it for the most part the last couple of months. And then you've got the prior support level at about 15.5, which is likely to ward off the buyers if we were to ever get back up to that level again. So I think in the short term, we have maybe a little bit of upside, but this is not a stock. I'm not trying to catch a bottom on stocks that are underperforming, hoping that they bounce. That's not my style. So for that reason, I would avoid UCTT.
All right. Here's one from the energy sector, integrated oil and gas. SASOL, SSL. Interesting support at 39.
I like the relative strength on the stock. No doubt about that. I mean, we just broke out above what looks like triple, quadruple top in the 38, 39 range, just got above it. Is this, a reverse spring? I'm not sure what Wyckoff calls it, where you get a false breakout, but you might consider that because the group itself is not broken out. And if we start to roll over, this could just be a false breakout. I'm not overly impressed by the volume that came in on this breakout after trying to get through a key resistance level for months. Doing so on what appeared to be just kind of average volume is not overly exciting. Here were all the tops I was talking about coming through here. And then as we make the breakout, the volume declines back to average at best. And the group itself hasn't broken out. So you've got a stock that's outperforming, but in a group that has been underperforming. And I know Mary Ellen touched on this quite a bit the last couple of days, and I think made a pretty good point that, owning a good stock in a bad group is not as good as owning a bad stock in a good group a lot of times. So I would pass on it just because it didn't have the confirming volume. Maybe it's one to keep on a watch list, but I think there's too many negatives here for me to get involved.
All right. Thermo Fisher Scientific Medical Equipment, TMO. Maybe a flag?
I love this stock. I love it. I love all this consolidation and the breakout. Look at the volume coming in. Now, that to me is serious accumulation. I agree. I think it's in a flag right now. If we could get a pullback down close to 225, I'd be all over this. It's on my strong earnings chart list. You can see the medical equipment companies are strong. The stock is definitely gaining strength relative to its group, and it broke out versus the S&P, and the group is trending higher versus the S&P. So there's really not a whole lot like here. I think for a while, after it made a huge move back in December and January, we had to go through this period of consolidation, but we have done that. made the breakout, heavy volume. I'm just waiting for a pullback to get in at a better entry point. Here was the high that we saw back in early February. Here was the gap up. I think that was earnings related. I think that was the earnings gap up, if I'm not mistaken. But anyway, we've got the breakout. If we go back and test support around 225, get close to that rising 20-day, I think this is a good stock.
All right. Integer Holdings, ITGR. I'm very torn with this chart. I just got a PMO sell signal, but I really like what looks like a successful test of that 20.
Yeah, I like this one. Another one where the group hasn't broken out, but clearly this has been a strong stock. Great volume trends, just continues to rise, probably on earnings, consolidates, and then goes up again. So, I mean, this is literally like a stair step that you could see that the stock continues to move up. You've got the top of gap support here coming in right at near $70. We just tested that along with the 20-day moving average that you just mentioned, Erin. So, yeah, this is a accumulation zone, I think, on the stock. I would say 68 to 70. I would be a buyer of the stock. If it loses gap support on the bottom, or maybe this price support level around 67.5, you could keep a fairly tight stop, but I would expect it to go higher.
Mm-hmm. All right, the last one, rather interesting chart. Turtle Beach Corp, technology firm, electronic equipment, here, HEAR.
Okay, wow. Now that was a parabolic move.
Right?
Dollars at the end of March, and now it's 27. And it's doing this in a group that has not been overly impressive. So this is certainly an isolated type of an occurrence, and there is your relative strength versus its peers. I'm going to shorten the chart on this one. Let's go maybe with like just the last 3 months, just so I can try to find some support. It's hard when the stock moves up that much. And even here, it's not that easy. But let's draw a line on the last breakout, which I would say was maybe right around that level. You can see the prior double top here when we made the breakout. You see the volume pick up on that breakout. Each time we went back and tested this breakout level, we held. And so that's where I think your best reward to risks come in, is when you go back and you test price support on pullbacks. As we've broke out above the top here, we had a double top as well. The breakout wasn't on quite the same kind of volume, but we did break out nonetheless. We've been holding that level on pullbacks. So I think we're maybe between 25 and 30 in a trading range. Closer we get to 25, the better I like the stock on a reward to risk basis. But wow, if you've owned this one this year, congratulations.
Right. I wish I could get on another parabolic. It's they're a lot of fun to ride, that's for sure. But yes, I always in a parabolic situation set those trailing stops. Real important, I think.
Absolutely.
All right, 10 and 10. Here are the symbols that we went over. I will get those up in the Market Watchers Live chart list following the show, where you can find all those annotations and relative charts that Tom just went over. All right, we'll be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
All right, time for our final market update here on Market Watchers Live. You know, most of the indexes were traveling to the upside, but we're seeing a turnaround right here, especially in the Dow, which has really fallen down. It's looking at the level of 25,325 as support at this point. It is trying to make a comeback. We have the S&P 500 also was up and now is down just about 4 points. We have the NASDAQ and, of course, the NASDAQ 100. They are both staying in positive territory, and we have more trouble for that S&P 400. I did talk about the mid caps in the earlier DecisionPoint monthly review, and we can see a continuation of the problems right here with staying on the negative side all day here for the S&P 400, down 14 more than 14 points here. Russell 2000 also lower, did spend some time in positive territory this morning, but has succumbed and is falling much lower. TSX, pretty choppy day for the TSX, but it all occurred under yesterday's close. Currently near intraday lows. We're looking at the TNX Treasury yield, 10 years Treasury yield, rising. And right now we have almost 3%. We're at 2.999% for 10-year Treasury yields. UUP is up on the day. Gold gapped down, but it is moving sideways, mostly sideways. And we have USO with the gap down on the open and staying on the negative side, but trying again also to make a comeback, bouncing off of the $14 range there for USO. And finally, the VIX is climbing. We're looking at a reading of just above 13, so not completely nervousness going on out there, but certainly seeing a little bit of rise, at least since I was gone. All right, and that completes our final market update. Tom, I'm going to let you take it away. I know you probably have a chart you want to share, and I understand you're going to be doing a technical scan as part of your SCTR report.
Yeah, let's go ahead and take a look first here at the NASDAQ 100 because we did break down below the 7,300 level. So after breaking above 7,300, that typically is a support area. Broken resistance becomes support. It's kind of TA 101. Earlier this week, when we did move back down below that 7,300 level, first of all, notice the volume was pretty heavy compared to what we had seen earlier in the month. And so as we come back up, one of the first tests, in my opinion, is getting back through the 20-day moving average and through that price resistance level, which is at 7,300. Today's earlier high was 7,295, and we have backed off of it. Now, I'm not saying we're going right back down. You can see that back in late June, we had similar issues where we came below the 20-day moving average. We also fell below this prior breakout support area. And it took a little bit of time, but we consolidated and then eventually broke back through. So I don't know what form this is going to take, but I would watch 7,300. I think if we can close back above that, that would certainly help to begin to right the ship on technology. If we fail and we go down and break below these lows and the 50-day moving average, it would be the first time that we would close below the 50-day since back in early May. So we're talking about a 3-month period. That wouldn't be a great technical sign. So that's something to watch. And if you zero in onto the hourly chart on the NDX, you'll see that as we break down that 20-day moving average, and I'm going to go ahead and annotate that price support and resistance level right here. You can see the prior highs right at 7,300. We tested 7,300 here, tested 7,300 here. We broke down. You can see a little bit of a fight back and forth at 7,300, and then the selling on Monday to kick off the week. And now as we come back up, look where we went to, right to 7,300. We're now we got this battle at the 12-hour EMA. And if we start to turn back over, or excuse me, the 20-hour EMA, thinking about the PPO, but the 20-hour EMA, if that fails and we start to roll back over and we go negative this afternoon, I think that would be a very bearish short-term development for the NASDAQ 100. So anyhow, I just wanted to add that because there is a lot of focus on the NASDAQ, especially after a couple really bad reports with Facebook and Twitter, and then a nice report, really solid report coming through with Apple last night. There is a battle going on in the NASDAQ 100, and this is where we've seen a lot of leadership throughout the bull market rally. So that's why I wanted to pay a little bit more attention to it here. Okay, let's take a look at the SCTR report for this week. I did it a little different. I am going to take a look at a technical scan using the SCTR readings, and I'll show you how I do that. So let's first go down and take a look at the scanning area of the member dashboard. And if you don't see that, make sure under the gears over here that you've got your scans and alerts set up with a check. If I take that off and update, if you don't have it, you're going to scroll down. You're going to say, what are you talking about? I don't see any scans. So always make sure on that panel that you do have the scans and alerts checked. And then as you go down, you will see your scans. Now I'm going to do a new scan and just show you how you can easily create one of these. The daily simple moving average of volume, one criteria I'm going to use is that over the last 50 days, I want my stocks to have at least 200,000 shares traded. So that's just a default criteria that comes up, and I just like to change it to make sure that I have liquid stocks. And then what I'm going to do is I'm going to go over here to the scooters. And if I add the scooter, the default is scooter greater than 90. And that's what I want to use for this scan, because the scooters greater than 90 are giving me the top 10% based on the scooter calculation. It's giving me the top 10% of the stock market universe. And so then I'm going to go down and I'm going to say under my technical indicators. So if I get the high scooter ranks, but I want to get stocks that pull back, that's kind of my style. I'm going to look at, say, the RSI. So I'm going to add the RSI. And right now it's saying that it's greater than 70. That's the default. I want it to be greater than 40. But then I also would like for it to be less than 45. So it's going to be between 40 and 45. And so I just change this. And then I can check my syntax. Tells me everything's a go. And I'm going to run my scan. And it brings up 35 stocks. So this is a pretty manageable list. So first of all, I know I have all the scooters above 90. So these are going to give me stocks that are pretty strong, but an RSI between 40 and 45 is going to give me stocks that have pulled back. So they're great long-term stocks. They've had great uptrends, but they clearly have pulled back and they might fit my style. So I'm going to take this. I'm going to replace an existing chart list, which I'll just put in the scan results. That says RSI 40 to 50, but that's all right. I just want to put it in here. And then I can decide what I want to look at. Now here I do have it sorted in scooter order. And you can see that the one stock that is right on the top with a scooter rank 99.5 is TripAdvisor. So let's pull the chart up, take a look, see what's been going on. Well, the stock clearly is in an uptrend, and I could probably stretch this out maybe to a year. And we had a lot of basing, big gap up, beautiful volume. That was earnings, I remember it. Nice earnings report. And the stock has continued moving higher. But if you look closely, this is exactly what I look for in a stock. Here's the key breakout. So we gap up, very heavy volume, take out the double top, and that's normally a good sign. If we had come back down at some point to the 46, 46.5 area, that would have been a great entry in my view, especially if it also coincided with the 20-day test. But we didn't get it. The stock continued to move higher. Look at the volume coming in on the next breakout. PPO rises. Everything looks good. Here, as we make a breakout, you can see the volume is actually starting to dwindle. We come off the 20-day test for the first time, and we break out again. And once again, the volume is just kind of average at best, reversing candle, and down we go to the 50-day moving average. So here is your negative divergence, higher prices, lower PPO, reversing candle, and we do get that the 50-day test. I would actually like to have a support level test. I would feel really good about a support level test near 55. We're already getting the 50-day. And remember, this is a stock that was at 62.5 last Friday. So it's down close to 10% at this point. And if it were to pull back to 55, be down more than 10%, you'd be at a pretty significant support level. And this area down to 55, I would be a buyer. So I actually think that Trip, even though it might not be a buy just yet, it could be a stock where you might want to consider accumulating. And if it closes below 55, you get out. It goes back to 62.5, you take your profits. I think that this is a potentially good trade here. And it is on my strong earnings chart list, which always helps me. But they will be coming out with earnings. They've reported here the second week of May. They reported in the second week of February, first week or start of the second week of November. So in a week or so, they're probably reporting. So keep that in mind. I don't like to hold into earnings. But I wouldn't be surprised to see the stock make a run into its earnings. We'll see. Let's see. The next one that we had on the list, Steinmart. This is a much smaller company in terms of its stock price. After getting up to $4, it's pulled back to about $2.20, but it still has a scooter rank at 99 because it is trading still well above its longer-term moving average. It has been pulling back, We'll probably see that scooter rank start to drop if the weakness continues. But at least in the short term, we are holding the support level just above $2. I'd watch maybe for a breakout of the trend line, which would occur maybe at about 230, 235, something like that. Or you could take a shot on this recent support level. It's not too far from that, especially if you're looking at a target up near $4. Nice reward to risk setup. Stock's only traded 62,000 shares today, though. So it probably barely met that 200,000 criteria for me. And you can see that the volume has been much lighter since we had the huge move back up mid-March. Next one on the list, Dexcom, DXCM. Another stock with a negative divergence. Higher prices, lower PPO. Volume also not very strong on this push to the upside. I always like to confirm light volume with a negative divergence because the divergence itself only considers price action. You're only looking at closing prices in determining whether or not you have a higher price relative to the PPO reading. So when prices are going up, you get higher closes, lower PPO, you have a negative divergence in price. So you have a signal of potential slowing price momentum. To confirm it, though, I think you see light volume. So you're breaking out, and there's really not a lot of volume to support it. That can be problematic along with that negative divergence or slowing price momentum. And sure enough, after failing at 105 a couple of different times, we have now pulled back to 95. I think you've got really good price support on DXCM down around $90. I wouldn't be surprised maybe if we get down to that level or get close to it. So as it gets close to the low 90s, I think you can keep a fairly tight stop with a target of 105. So your reward to risk really starts to build. Let's take a look. Here's Canada Goose Holdings, GOOS.TO. This one I find to be at a very unique level because after the gap up on very heavy volume, this was earnings related. We pulled back and we had a low that day of 70. That's when the buyers really kicked in. We went from 70 to 90. And here we are 6-7 weeks later, and we're back near 70. I think that this represents a real solid reward to risk entry in the low 70s. Keep a fairly tight stop. You could put an intraday stop below 70. Sometimes that just gets you taken out right before a reversal. So you've got to kind of weigh that as well. But I do think the 70 area is major support on the stock, and I wouldn't be surprised to see us bounce off of this area. Let's take a look at a few more. Lululemon, LULU. Huge gap up with earnings back in June. Stock continued to make a run for the next 2 weeks. By June 18th, we were all the way up to 130. We were at 105 before earnings. That's a pretty steep move in just 2 weeks. Roughly 24%, something like that. Triple top. The PPO rolled over, failed. We moved all the way back down now to the 50. You can see that the PPO has been reset at the center line. Most of the selling here the last few weeks has been on fairly light volume. I think that the current price, 120 down to 114, is an accumulation zone. 130 is your initial target. Star Surgical, STA. I'm just working my way down at some of these higher scooter ranks. But you can see, again, very similar. Beautiful move up, great volume. But as you keep moving higher, look at the volume dwindling as we move up. Then you got this really negative-looking candle, went down, put a doji right on the 50-day. Tested gap support and price support just below $30. I think the trading range on the stock, I'm going to say, is 29 up to about 35. As it gets, closer to that 30 level, again, I like the reward to risk here. And let's take a look maybe at two more. I want to go down a little bit further. Trying to see if I recognize any of these that actually New Relic. This is one that finally must be selling off. This was a really strong small cap company. And there's your reversing candle. There's your bearish engulfing candle with that negative divergence on the PPO. Higher price, lower PPO. Here's your pullback. I think you've got really strong support at this low at 95. The stock actually looks like might be reversing back off of it. Volume picking up. But 95 to 115 is the trading range. Stock trading at 100. I think accumulation 100 down to 95. Tight stop below 95. Target 115 sets up a nice trade on NEWR. And let's just look at one more. Adobe. A number of those stocks, by the way, were software stocks because the group has been hit so hard. I'm not that concerned by Adobe selling off like it has the last couple of days. Yes, volume was heavy. We haven't taken out the prior support. I think the 235 area is great support. 265, 264 is your resistance. If we see a little bit more weakness in Adobe and get down into the 235, 240 range, I like the reward to risk on Adobe as well. So anyhow, just wanted to show you, you don't have to start with the scooters. You can actually start with the scan engine and go back and just, pull up stocks based on what you look for. For me, a high scooter stock tells me I've got momentum to the upside. RSI 40 to 45 tells me I'm getting it in a pullback. And I think looking at all those charts highlights or illustrates exactly that point, that you're getting stocks that have been performing really well, but have been weak of late. And those are stocks that I think could make really nice runs as we head out into August and September. So there is a quick summary of what I just looked at.
Excellent. And somebody did ask about, trying to use the industry groups as part of that. And let's see exactly. The question was that, is it possible to see industry summaries for this scan? So you can know which ones are predominant, in your list. To me, I think that you could easily put that in your scan or check the industry summary report.
Yeah, the scan components, you definitely could do that with the scan components where I picked up Scooter and I picked up the RSI. There's another one that's indexes and ETFs where you can go in and look at certain indexes. There's also the bottom one is sectors and industries. So you could pull up the entire consumer staple sector, for instance, or you could go into individual industry groups within those. So there are definitely ways that you could tailor it like that. Or as Erin says, if you go into your member dashboard on the left-hand side under the control center, and you go down to, say, the sector summary or even the industry summary, and then click on an industry, it'll bring up all the stocks in that industry, and you can then sort that by scooter rank. So there's a lot of different ways that you can get to it. And actually, since I just talked about it, instead of just talking about it, I can take for just a quick 30-second educational moment here. But here's your member dashboard. So what I was saying is that on industry summary, let's just say footwear is the one you wanted to go into. You click on footwear, you click on the scooter rank, and it ranks you. It gives you the best performing footwear stocks based on scooter rank. And then you can pull those stocks up and look at them. So with that, go ahead and show.
Yeah, we have quite a bit coming up. Bruce Fraser will be here tomorrow. I've got sentiment. The big news, of course, is ChartCon, August 10th and 11th. So looking forward to getting on the airplane and seeing all of you guys. We didn't pull up the poll, but I'll just say really quickly that it looks like everybody is behind the Dow as far as best price performance coming up in August. I don't know. I thought that was very interesting. Stock Charts TV announcements, you can see right here. The main thing I want to point out is that we won't be having live shows during the 13th through 17th, but we will have all new special segments that you can watch with all new content. So you won't be disappointed, even though we're going to be gone.
Awesome. Looking forward to ChartCon. Want to thank everybody for being with us today. Please remember to complete that survey as you exit. We do love to get your feedback, hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everybody. Watch for the Fed at 2 p.m. We'll see you back here tomorrow. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.